Good morning, guys. So I'll still do a little recap of what we've learned all along, the four candles that we trade. Then I'll still talk more on structure and how to engage using the candles. So the four candles that we trade, let's go there. The four candles that we trade are the four candles that move the market per se. First one is the Doji. Two, hammer, three, three candle formation. And four, the engulfing candle. These are the candles that we trade. These are the candles that move the market, of which I told us the first three, Doji, Hammer, and the three candle formation. They signify possible reversal, more like indecision, price direction. So when you see the first three, yeah, it's not so certain that price will reverse, but it's telling you, okay, price might reverse. But once you see an engulfing shows strength to either buys or to the seller. So once you see an engulfing candle, either the trend continuation, the continuation or reversal is confirmed. That's for the engulfing candle. So let's go to Google now. So we'll see a pictorial view of the stuff. Now see show us on the chart. So the first one there was the Doji candle, Doji candlestick. This is the Doji. The Doji has a what's it called? Yes, yeah, good. The Doji have a very tiny body, very tiny body, with plenty wick above and below. Can't seem to open this picture big enough, but let's see. Good. So this is your Doji. See, it has equal lengths of wick above and below the small body. Equal length of wick above and below the small body. That's your Doji. Second one is the hammer. Told us the second one is the hammer. More like your traditional hammer stick. More like your traditional hammer stick. That's it. For the hammer now, the body is pushed to one end. Then the whole wick is on the other end. The same thing, pushed to one side, the wick. So this is the hammer. Either this hammer or the inverted is the same thing. Either of them is the same thing. Then the next one is the three candle formation. Three candle formation. Morning star. Watch that. That's either your morning star or your evening star. This is it here. Three candle formation because we have a thick body candle, a doji form, another thick body. Thick body candle, a doji form, another thick body. So the one facing up is your morning star. The reverse of this one is the evening star. When you flip it over, like when you have a thick body, doji above, thick body. When you flip these three candles, it's called the evening star. So I call it three candle formation because it comprises of three candles together. That's the three candle formation, either your morning star or your evening star. Then the last one now is your engulfing candle, engulfing candle, and that's it. This is your coming good. This is your engulfing candle here. This is your engulfing candle. When you see a small candle with a big one above, once you see a small candle here with a big red, it's telling you the bullish market is exhausted. Sellers are coming into the market. Once you see a small red candle with a thick green like this, you just know trend is to change from what's it called? Previously selling market to a bullish market. So these are the four candles that will trade. So now let's go. So I've shown us the pictorial view of these stuff now. So let's go to structure. Okay, let me try and show us some of the candles on the chart and how they responded paired with structure. SDJPY. SDJPY. Let's see. This one is running currently. This one is running currently. So what do we see on the 1 hour chart? Yeah, on the 1 hour chart, the market has been bullish, impulse correction, impulse correction. Then this was your last corrections leg. We closed below here, closed below here. Then from structure mapping, I told us once the market change, once you have a close below the last corrections leg, as it has happened here already, what do you need to wake out for? You see this impulsive push, a little correction, and impulse. So this is now your sell structure. Impulse, correction, impulse. Then I told us you x-ray the extreme, the origin of that first impulsive push for either of these candles. Either of these candles here, either of them. Either of these candles. When you see either of them paired with that structure mapping, they are good to go. Then for this one now, you can check the extreme now. The extreme here now, we had a doji formation. That's a clear doji formation. Clear doji. What do? You mark it and extend it to the future. That's it. That is it. You place your sell limits and target the previous. So this trade is running currently with my community. Trade is running currently. So that's that. That's it. Impulsive push here. This leg, market came down. Impulsive push here. Correction. Impulse again. Then the extreme now, we saw the doji candle. What do? You short here. So price should come down and take out this extreme. So that's where the doji candle came to play. Then let's check if I can get the other ones and show us. Let's check. Let's check if I can see some and show us. If I can see some and show us. That one is done. Let's check. Okay, good. If you see here now, the trend is a little, what's it called? Bearish. Have these straight sales down, impulsive sell, a little correction that didn't go down. All good. Actually, the origin of this push. We had a break below this low. Had a break below this low. Then we saw this down push. What do? Extract the origin of that push. The origin of that push. What can you see there? An engulfing candle. Here. Engulfing candle, that's it. Engulfing candle. What do? You mark the candles now, extend it to the future. That's it. See it here. That's it. This is now candle pairing. You have an engulfing candle now paired with a doji here. What do? You place your short position and you target these lows, or you take 1 to 4, always take 1 to 4 and leave the market. This will be your target. Oh, that will be your target, sorry. That will be your target. So going short here. This is the candle pairing idea I told us. See an engulfing candle, that's it, put 1 to 4. 1 to 4, you can see adjust your stop and take 1 to 5 and leave the market. So I've shown us what was it called? Good. This was an old setup. On an old setup, we can see here to the same thing. We had this push to the upside, then what can you see? Impulsive sell, correction, impulse. We have this distant wick here, so price can fail here. And if you x-ray the origin of that push now, what can you see? X-ray the origin, you see a doji candle there. A doji candle, doji candle. The market has a point of entry. Extend it to the future. Extend it to the future. What do you see? Then you place your short position to the SL always above the zone. Take 1 to 4. That's it. Take 1 to 4, 1 to 5 at most, and leave the market. So I've shown us two examples of where the doji here we had the engulfing candle here. The engulfing candle played out there. The doji played out here. Then the doji is currently playing out now. The trade is still in what's it called? The trade is still running currently. Still running. That's it. The trade is running in my community. Running. Take 1 to 4. Take 1 to 4 and leave. So that's that. Let me check. So if you can see now, I'm doing this one now on the Haitian time frame. Like I told us, you look for continuation patterns or continuation structure on the lower time frame. Then you look for reversal pattern on the higher time frame. If you check now, would have lost here. We had this impulsive push, correction, and impulse. You check the origin, you can see an engulfing candle here. It's an engulfing candle, market to the future. You can see market price reacted there for a while, sold a little, and poof. So this kind of zone now, once market fails, it turns into a flip zone where you can look for buys. Market, if your zone fails, the same zone, you change it and look for buys. If you check here now, market came back to this zone, rejected this same zone, and gave us what they call this long candle here, then closed with a doji. The same thing. See your structure here, impulsive push, little correction, impulse. X-ray the origin. What can you see there? A doji candle formation. Mark the doji and extend it to the future. That's it. Here now, doji now is paired with doji as well. So I told us always take your, what's it called? Take your long position too now and SL below. Take 1 to 5 or 1 to 6 and leave the market. So that's that. That's that. That's that. That's that. This one, I doubt if it triggered. Okay, good. If you see here now, the same thing. Market was bearish before now. Then we had this push closing above the last corrections leg, yeah? So what can we see? Impulsive push, correction, impulse. Then X-ray the origin of that first push. What candles can you see? Can see your doji there, see the hammer. So you have multiple rejection candles here. Multiple of the four candles that will trade. What do? You extend it to the future. That's it. You can see the push. You can see target this high as your TP or take 1 to 4, take 1 to 4 and leave. Take 1 to 4 there, SL below the zone and leave the market. That's it. 1 to 7 good. So always target 1 to 4 and leave the market. So if you check here too, okay, this one is not so clear. This one has engulfing candle, market drawbacks. I'll leave that. It's not so perfect. Not so perfect. So okay. We had an engulfing candle here, which gave us the impulse. Okay, fine. Let's work with this one. This one is very better. This one is much better. Sorry if I say very better. This one is much better. At the extreme, impulsive push, correction, impulse. What do? You mark the and this candle engulf this one, mark it and extend to the future. That's it. You can see the push. Take 1 to 4. Take 1 to 4 and leave the market. That's 1 to 4. Good. That's 1 to 4. You leave the market. So this stuff works on all assets, like all crypto assets, synthetic market, your stocks, your indices, everywhere it works. So you look for either of those candles and trade, either of them. Anyone you see, here you have an engulfing candle there. Anyone you see, you trade. Anyone you see, you trade. What was it called? Anyone you see, trade. I think I showed us this one in the last class. Showed us this one in the last class. But if you check here now, good. If you check here now, the bullish market, yeah? Then we had what? The impulsive push. Impulsive push, correction, another impulse. Origin of that impulse, what can you see? An engulfing candle. Engulfing candle here. Engulfing candle here. Small red, big green. That's it, a small red, big. What do? You mark it, extend it to the future. That's it. That you go long here. And go long here already. Go long here. SL below this one. This one you give you much. SL below this one, good. That's 1 hour trade. Okay, not a bad one. Or the same thing after this push, impulse, correction, impulse. What candles can you see? What candles can you see here? You have your doji candle, another hammer, doji and a hammer formed. You mark it and extend to the future. That's it. So once you are exiting these cells, the same thing. Take 1 to 4. Take 1 to 4 and leave. Take 1 to 4. 1 to 5 at most and leave the market. So that's it. That's it. Let me see if I can still give us more examples. US oil, US oil, US oil, US oil. I always like working with the most recent data. So good. Let's see. If you check here now, we had this was equal this previous, and this was your okay. This was your three candle formation, but let it be. Let's leave it for now. So let's work with this X-ray. You can see now we had this impulse correction. Then getting here now, this corrections leg was taken. It was the last correction, the leg was taken. Then your structure now is what? Impulsive sell, correction, impulse. Extreme where the market came from, what can you see there? Dragonfly Doji. You mark it and extend to the future. That's it. Then you place your, what's it called? Place your short position to there. Place your short position to there. Place your short position to there and take 1 to 4. Or you target its previous lows. That's it. You leave the market. And if you check here too, we had an engulfing candle here. An engulfing candle here. The same thing, impulsive push, correction, impulse. You mark that engulfing candle, extend it to the future. What can you see? Market came, engulfing candle here again and went up. So that's just it. Then if you check here as well, impulsive sell, correction, impulse. So most likely, we had an engulfing candle here already now. Good. This I told us what was it called? This is your three candle formation. Three candle formation, you can sell it directly, or once this thing happen, once you see an engulfing candle, trend is valid already. You mark this one, you can see now, market is reacting from the engulfing candle, midway the engulfing candle already. So that's what this whole course is all about, like making Forex easy for people to understand, like just the simplest way to understand it. That's what I'm trying to do. The simplest way to understand it. Here again, impulsive push, correction, impulse. What can you see? An engulfing candle here. Let's see if it triggered us. Okay, we missed it. You can see it was very close. Maybe after this push, what candles can you see here? This green candle engulf this red candle. The same thing. You mark the both candles and extend to the future. That is it. Like that is it. And if you see, and you can see an impulsive push, correction, impulse. What do you take? Buy here, go long, target these previous highs, or take 1 to 4 and leave the market. This one would have lost money here. Okay, it's not a perfect engulfing candle, would not have traded it because why? We saw an impulsive push, correction, impulse. But do we have either of our candles there? No. We don't have an engulfing candle here. We don't have a doji, so we would not have traded this pair. So that's that for that. Let me see if I can see one more example and show us. One more example and show us. Okay, good. Here the hammer formed before if you check here now, we have this cell, then it's impulsive push to the upside. What do we have here? We have a hammer, inverted hammer rather here before this. What do? You mark the hammer candle and extend it to the future. That's it. Market just taps and boom. That's why I call them the candles that move the market. We check here now. Is what's it called? Impulsive push, impulse, correction, impulse. What do you have here? An engulfing candle. What do we do? We mark, extend to the future. That's it. Market taps and push. So those are the candles you need to focus on. It works everywhere. Put your crypto assets, like it works everywhere. What can you see here? Impulsive push, correction, impulse. Previously engulfing candle here. Then you had this sharp doji. You mark it and extend to the future. That's it. You buy. Exit at the end or take 1 to 4. So that's what this strategy is all about. Yeah. It's not so hard. I've made it very simple for us, like very simple for us to understand. If you check it now, what can you see? Market was bearish, impulsive push, correction, impulse. Can see your small doji there. There's plenty candles there. What do? You mark it, extend to the future. That's it. So the same thing here. Impulsive push, correction, impulse. What candle can you see? An engulfing candle. Market can extend to the future. That's it. It's not really hard. Just know the candles, know what they look like. Then look for them after you might have identified your trend. If you see here now, okay, this one is not so perfect, but impulsive push, correction, impulse. What do? You take the same thing here, impulsive push, correction, impulse. See your inverted hammer candle here. You mark it to the future. That's it. See, market will just tap inside and run. Like market will just tap and run. So I think I've done enough here. So the next video I'll talk about how I trade and maybe other strategies I use. Not other strategies per se, because everything is still embedded in these four candles, but how, like, let's say other means of how I read price in the market. So stay put, guys. See you next video. Take care.